I've just seen that whatever you do in your industry, if you go against people that are selling and you're teaching, it's not even fair. It's such an unfair advantage you have. But yet I still see a lot of business owners trying to not pull back the curtain and trying to hide that.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Are you ready to start investing in real estate today but don't know where to start? Sometimes investing can seem way too complicated, but it actually couldn't be any easier than with homeinvest.com. You know the co-founder and my friend Nate Armstrong. He appeared on episode 20, and if you haven't heard it, go back and listen to it, episode number 20. Home Invest is a company that allows you to invest in turnkey real estate. Their goal is to build powerful investment tools that make real estate investing accessible to everyone. They have contractors and property managers available for you with the click of your mouse. While other real estate agents can only offer a property, Home Invest brings you a full turnkey package that allows you to diversify your investments, earn passive income, and start building equity in properties. Their simple, intuitive design allows newcomers and experienced investors alike to hit the ground running and to be able to choose the properties when they want and where they want. View easy to understand charts and data to allow you to buy in only a few clicks or just a simple phone call. With Home Invest, you'll be building your portfolio as quickly or as slowly as you would like. And right now, Home Invest is giving our listeners, Pillar of Wealth Creation listeners, a free course on how to finally win in real estate investing. So go to homeinvest.com/pillars. That's homeinvest.com/pillars to claim your free course today. Well, I'm excited to have Ty Crandall on the podcast. Ty, how are you doing today?
Good. How are you?
I am doing excellent, and I appreciate you being on the show. A little bit about Ty. Well, I think we'll dig into this more, but you almost declared bankruptcy at one point, and now you help others avoid those same mistakes. And your business, which is Credit Suite, is internationally known business credit expert with almost 2 decades. You have almost 2 decades of financial experience. And so you're currently the CEO, like I said, at Credit Suite, and you oversee the largest business credit coaching operation in the U.S., which is awesome. So Ty, why don't you give our listeners a little bit about your background and then kind of what Credit Suite actually is doing and what you're doing, and then we'll maybe dive into a little bit more detail.
Yeah, absolutely. I was I got out of the military. I was in the Air Force, and I pretty much have been in financial services ever since. I found that I have a real passion for that, and I spent a lot of time on the consumer side. Took a leap, opened my first business, which was a mortgage company in the height of the mortgage industry when everything was really blowing up. And then unfortunately, I kind of held on too long, not thinking the whole thing would collapse. And I found myself, for a lot of people, unfortunately find themselves first starting businesses, going from a successful business to a failing business. And I, like a lot of business owners, personally guaranteed everything in the business, which means I signed for it. So when the business started to default on its debts, the creditors came after and wiped out all my personal assets, pushed me almost to the brink of personal bankruptcy. And by I mean almost, I mean I paid the bankruptcy attorney. I did the paperwork. So anybody that's filed a bankruptcy knows how elaborate the paperwork is. And then at the last minute, I just decided to fight my way back, which took a considerable period of time to do so. But amongst all this, I opened a consumer credit business, and a lot of our customers would ask us about business credit. And I didn't really know much about it at the time, spending over a decade in financial services. And when I looked into it, I was just really shocked at what business credit was, that it existed, that any business could get it, that it was a way to separate personal and business credit, to separate personal and business liability. So we started offering it as a service to our customers. It really took off. I found that I had a passion for that, not as much on the consumer credit side. So I sold that business, and I've been doing business credit ever since for about the last 6 years. And pretty cool. We've helped now about 15,000 people build business credit during that time. And like you said, now oversee one of the largest coaching operations in the United States, including we've got thousands of partners out there that we help all their customers as they're teaching about business credit. So it's been an interesting road over the last 10 years.
Cool. I want to ask you a question. Why did you fight back with the bankruptcy? You said you were almost there. You started consulting and getting that all set up. Why did you decide I'm not going to move forward with this anymore?
You know, I think it's interesting because on a lot of applications for anything, it asks you, has this happened in the last year, 3 years? And what I found is that bankruptcy, there was no time frame. You know, the questions that I would see on applications, have you ever declared bankruptcy? And that stuck with me. You know, that's one of those things that once you do it, you can never go back. It stays on your records for 10 years. And indefinitely for the rest of my life, I would have to answer that question of, yes, I filed for bankruptcy. And so when I really started to look at it at that time, you know, I realized a lot of the debt that we had was credit cards. And, you know, some time had passed. They didn't seem to really be coming after us. And it just seemed like, you know, this was happening to so many people that we were getting notices that our second mortgages were being forgiven. They were just going away. And there was just so much happening. And then we kind of decided to roll the dice and see, you know, who would come after us and try to pay back or deal with that debt as it occurred. And it ended up being a pretty good decision. You know, only a few of the credit issuers came after us, and we worked, you know, things out with them years later, and we were able to recover much faster without having doing that than actually going through with that decision.
Well, it sounds like the right decision to make. Bankruptcy is there for a reason, but I think if you can avoid it, that'd be best.
It can. And I remember it was just interesting because we had the paperwork done. We'd done like the things you have to do to file. We'd pay the attorney. And I remember the attorney literally wanting and praying with me that day when I told him we weren't going to do it. And I think it was astonishing for him because we went so far than not to go through with it in the end. But look, it's different for different people in different situations. You know, in ours, in the beginning, it looked really bad, but then a little bit into it, we started to realize that maybe all these debtors were not going to necessarily come after us. And that's what ended up happening. There was just so much defaulting that only a fraction of them ended up really pursuing us. So it worked out well for us because we were then able to work with them, recover, pay that back. So it was an interesting and very hard road that I wish upon nobody to ever have to go through.
It was maybe the best time for it to happen then, if when you look at it that way, these creditors were overwhelmed with so much that they just were hoping people would just pay them. Like,
sure,
just give us a couple bucks. We're not going to go after you.
Yeah, look, there's never a good time.
There's never a good time,
you know, for a business to fail, you know, and to go through that. And that's what I realized. But you're right. I mean, we didn't have kids at the time. You know, we could fight through that, although it would have been a lot harder if the lifestyle and the things our children have would have been stripped away from them. That's something they never had to see. But it really taught me a lot, Todd. And one of the things is that you have no freaking control over what goes on, really. I mean, you think you do, and we had contingencies and we had credit available on the personal side, the business side, and we had assets and we saved money. We did all the things that you'd think are right, but then something comes out of left field, and all of a sudden our ability to do what we do as a job completely ceased overnight. And, you know, I don't care what industry you're in or how responsible you are in, when your ability to make money completely stops and 6 months later it returns and 90% of what you made is gone and you're only making 10% of what you were, that's a hard thing to recover from. And it really showed me how little control that you have over these outside forces that could directly impact your business, and how important it is that you have available credit there, and that you know that when you go late once, it reports and then everybody else pulls their credit back, and that you don't personally lie, you know, you don't personally guarantee things to happen in the business. And, you know, so I learned a lot of lessons from that experience to protect yourself always, because as entrepreneurs, we never expect to fail. Like, that's the last thing on our mind. But at the same time, there's just so many factors that we can't control that sometimes that's inevitable.
Well, let's talk about this then, because you're doing business credit coaching, and so Give us kind of a, maybe the shortened version of, why what you do is a positive thing for business owners to look at and to work with you or work with a group like yours.
Well, I think the one thing to know is it's kind of like this, and this is the way I describe it. Business credit is as important to your business as personal credit is to you as an individual. You're using consumer credit to be able to qualify for credit cards and get loans and get mortgages, and business credit allows your business to do all the same thing. It allows your business to be able to fund itself, and that's important for so many reasons. I mean, the statistics are 75% of business owners get money from family and friends. A lot of that never gets paid back, right? And then that creates all kinds of tensions and problems. An even larger majority are using their consumer credit and personal funds to try to
Mm-hmm.
fund their business. And the problem with that is consumer credit was never designed to fund a business. So, Todd, what we see people do is they come in, they want to start a business, they use personal credit cards because they're available, and they go boom, and they start funding their business. Then, of course, it's more money than they thought it was going to be. They quickly have maxed out those credit cards. Then they try to find the other routes to get money. The problem is that with consumer credit, a third of your consumer credit score is based on utilization, the balances you have on your credit card. So when business owners go through this, that I see so many go through, they max out their credit cards, they tank their personal credit scores. Now their ability to get any kind of financing, any kind of credit in the personal and business world is inhibited when they didn't have to do that. Business credit cards have limits 10 to 100 times higher than consumer credit. So they're designed to fund businesses. And when you're using it and doing the system the right way, meaning you start building credit for the business, then you start using these high limit accounts to fund the business, you leave your personal credit alone. What happens is your personal credit scores stay intact. You can then use your personal credit for all the financing you use in the personal world and for bank loans and other things that you're going to need it for in your business. And then you let your business fund itself. You let your business start establishing its own credit profile. The business can fund itself. It prevents your need to go to family and friends. It prevents your need to liquidate your personal assets. It prevents your desire to use your personal credit and tank your personal credit scores. It's the way the system was really designed to do. And when you try to fight against that system, that's when it just becomes difficult, because you're getting all this money from all these other sources where your business could fund itself using its own credit profile and score to do so.
So Ty, I remember I think it was 2008 when I started my business, and I thought I was going to go to a bank and get credit card. Now this is maybe a bad example because it was right when everything crashed, but what's step 1, 2, 3 that somebody who's starting a business can do to be able to get this business credit and keep it out of their personal name from the start?
Sure. I think, and that's a great point, is that you do what a lot of people do. A lot of people go to their bank to try to get money, right? Well,
Yeah.
What's interesting is, one, that's really not the best place to start, because they won't help you unless you've been in business for years. But two, they cannot even help you unless you have business credit established, because they pull what's called a FICO SBSS score, which
Mm-hmm.
looks primarily at business credit, right? So the whole system is designed where if you don't have that credit, getting money at conventional banks is not even going to happen. But what you typically want to do is not start there. You want to start through a process of getting credit from vendors, getting credit from stores and from retailers. So the first thing anybody should ever do when they're looking for money is know that lenders and credit issuers have a secret set of criteria that you've got to meet to get approved. And we know this because we apply for credit cards online and we get an instant approval, or that dreaded message that we'll hear by mail in 7 to 10 days, which is never good, where we hear by mail. So we know their computers are making very fast decisions. And the key is to know what they're looking at. What is these algorithms looking at to determine approval versus denial? And what they're really looking for is what they deem legitimacy. So they want to make sure you're using a real business address, or maybe a virtual address, but not a PO box or not a UPS address. They want to make sure you're using a real business phone number or voice over IP, not a personal home phone or a mobile phone. That you have a professional website set up and an email address that isn't a Gmail type email address. It's one that's kind of linked to your domain, that your phone number is listed with 411, that you have a fax number if they ask for a fax number, that your stuff is congruent online. The business name and address and phone number you're putting on the application is the same as what's on Facebook, and it's the same as Yelp and Bing and Google and all these other sources, that you have an EIN set up, that you have an entity set up. So what I like to say is that every line item on an application you should scrutinize, and then you should really say, is the answer I'm putting here, does it reflect that I'm legitimate and credible? And if it's not, you should probably address that concern. And then that way you're only submitting information that from their perspective makes you look legitimate and credible. If you've done that, then the next thing is you got to get started with creditors that will actually issue you credit. When you first started your consumer credit reports, you couldn't go to your bank and get a mortgage, right? You had to start with small credit cards, then you build up to larger credit cards and cars, and there's a process. It's the same thing with business credit. You can't just start at your bank. They won't approve you. What you've got to do is start with people that will, and those are like Uline, Quill, Gimplers, Granger. These are unique because they're vendors who will extend you credit even when you have none reporting to the business credit reporting agencies. They'll give you credit even as a startup, but they report the credit they give you to the business credit reporting agencies, to Dun & Bradstreet, to Equifax, to Experian. So this uniqueness of them giving you credit when you have none and reporting it to the business reporting agencies starts that important profile. It starts the credit score with all three of the reporting agencies. Then you can go to a Staples, an Amazon, a Home Depot, a Lowe's, BP, Chevron, Sunoco, Costco, Walmart. Almost every major retailer offers business credit without a personal guarantee or credit check. So once you have about 5 of those kind of vendor accounts, then, and they all have to be reporting, then you can start to get in and get approved for Amazon and Walmart and this kind of revolving store credit. The key is that you don't want to provide the social security number. When you provide the social, you're providing the personal guarantee, you're providing the personal credit check. But when you don't provide the social, what you're forcing them to do is to make the approval decision based on your business credit quality, not your consumer credit quality. And that's what a lot of people don't know. When you apply for a business credit card, they're pulling your business credit and they're pulling your consumer credit. But there's no Fair Credit Reporting Act in the business world, so they don't have to notify you that they are. But when you don't provide the social, then you're forcing them to only make the decision based on your EIN business credit quality. And if it's established and you've paid your bill as agreed to get a good score, then that's when you start to see these retailers, these stores start to approve you for high limit revolving credit. Then it's exactly the same way, Todd, as you would build consumer credit. You get more credit, you use the credit, the limits get higher and higher, the more credit becomes available, and it makes it easier and easier to get credit and then even to qualify for loans and credit lines.
Cool. That's good advice because, I think most people, including myself, wouldn't have thought about that. Just, you go, well, how do I establish that business credit? I can't get a mortgage, so I can't get a credit card or anything. So, well, obviously I got to use my personal.
And that's why so many years ago, I was shocked to discover I'd spent a long time in financial services. I owned a consumer credit company. It's what I worked with was credit, and I knew nothing about it. Yeah. But then what I realized is that, statistically, over 90% of business owners per entrepreneur don't know anything about business credit. This isn't just me or you. It's everybody that tended to not know about it. And then I started to figure out why. Because, Amazon and Staples and all these cards that issue this no personal guarantee credit, they love the system like it is. The system like it is eventually you grow to $8, $9, $10 million. Then you get a CFO. Then you get accountants and bookkeepers. And these financial savvy people know about this. And then they start helping the business take the steps that I'm telling you about. So these credit issuers have relied on a system of ignorance on our part. They've relied on the fact that small business owners just don't know what this is or how it works, and only the bigger businesses do. And it's the bigger businesses that ultimately, by default, they kind of want to issue credit to because statistics show those are the ones that will be successful and not fail. So the system is kind of relied on us not knowing the information, and just by knowing that it exists and knowing how it works, it empowers you at a level that other people just don't have because you don't struggle to access money. And let's be honest, that's a big deal. I mean, the biggest reasons businesses fail per SBA is because they can't access the money. And when you remove that barrier, all the statistics show that businesses just skyrocketing growth when they have the ability to actually get the money to actually execute the vision.
Yeah, and obviously these companies are happy as can be if you're willing to put your personal credit on the line. They don't
Sure.
care.
Right. And that's what interesting what people say to me. People believe that some people believe, and they'll debate back and forth, that business credit doesn't exist because the credit issuer asked for the social. And, it's so interesting because the reason they ask for the social is because you're giving them the
He's
social.
gonna give
Like,
it to
yeah, they'll
them.
stop asking when people stop giving. But as long as 9 out of 10 are giving it to them voluntarily, why would they not ask for it?
Yeah.
1 out of 10 knows to leave it blank, knows to force the issue without the social, and then is getting the approval. And the other 9 out of 10 are just, they're just blindfolded. They don't know any
Yeah.
better. They just provide it, and that's
Yeah.
why they keep asking for the social. It's pretty interesting.
That makes sense. Yeah. I mean, you ask for it, of course I got to give it to you.
Sure, why not? Because we're conditioned to, right? I
Yeah.
mean, when
Well, and we
fill out
need the money.
Yeah, we fill out an application for credit. They ask for a
Yeah.
social. To us, that's normal. Never would we ever have thought until this information that you could leave that blank and still get approved. Like, this is mind blowing to people, and it's interesting to be in my world to see it happen. And then people are like, "Oh my gosh! Like, I cannot believe I just got a $5,000 credit card and I didn't even give my social." And then once that triggers where people start to actually see it, then it's just like a windfall of the amount of credit they're able to start obtaining. It's pretty cool.
Cool. That's it. That's awesome. So this, the 2008 or whenever that bankruptcy, almost bankruptcy, happened, how are you building your business and how are you doing things differently now than you did then to try to protect yourself from the next downturn, whenever it does happen, the next downturn? What are you doing now?
Well, there's there's so many things, right?
Yeah.
And that's why
Well, maybe give me 3 so we
yeah,
don't
I was
go
like,
on
I
for
welcome failure because you learn so much. One is you need to make sure that you have a lot of available revolving credit available before you actually need it. Credit cards and credit lines, to get them before you actually get in trouble is important. And then to know that if you go late on those, then the rest of the credit issuers you have will pull that credit back from you. And that's very important to separate business and personal credit, because if I have credit cards in my business name, the business starts to falter and I go late, then I don't have to worry about my consumer credit cards then pulling all my credit back. But that's what happens when you commingle. You get credit cards that report on your consumer credit report that you're using for the business. The problem is the business struggles, you go late. Every credit issuer on the consumer side sees that and they all pull your credit, meaning if you owe 1,000 and your limit's 10, they just lowered your limit to what you owe, which is 1,000.
Yeah.
And with utilization being a third of your score, the minute that happens, it's over, because then all of your utilization is maxed out. And then all of a sudden your scores just tank and your ability to ever use that credit for anything is ruined unless you pay off all the money, which you wouldn't if unless you're in trouble. So I think that's one of the biggest lessons, is to have money available before you actually need it. The second thing is that you really have to diversify in your business. We just had regulation that rolled out in May that could potentially mean that credit issuers are all going to start asking for a social. And so that's obviously game changing to our industry. And that comes out of left field again. So by being diversified, like with us, we work with credit, we work with financing as well. So even if the credit industry went away, which, let's be honest, it's not going to happen. They've been around longer than consumer credit, the reporting agencies in the business space. We still have business loans. We still have business financing. We still have a different segment to be able to rely on. So I think diversification in your business is very important, where you're doing different things. So if something ever happens to the primary, then you have something else that you can switch to immediately and start doing. I think that that's very, very, very important as well. And I think just mapping out contingency plans as well. Doing a SWOT analysis and knowing what the threats are that you could potentially face, and preparing for those threats on a regular basis before they occur, I think is very important. And we do that. We meet regularly with our team and say, look, what are the threats we can think of? New regulation, credit issuers stop issuing credit without a personal guarantee. What are all the threats that we think about now that could be potential? And then what would be the ways that we would overcome those threats if they were to occur? So I could go on and on, but those are a few of, I think, the biggest lessons that I've learned by going from having a successful business to it completely ending in utter failure.
Yeah, I think that's great advice. I mean, planning, essentially you're talking about planning some of your potential failures, and how you would react to them. And that to me sounds like very sound advice, because now you know how to react when something like that, even though it might not be the exact same thing, but something similar to it does happen. Now you know how to react instead of trying to figure it out as you go.
I've learned a really important lesson. For years, I've realized that really good stuff happens on the tail of really bad stuff. And so when something really bad occurs, like it doesn't freak me out, because I know that when I power through that there's something really good on the other end. But then I really started to realize last year for the first time ever that the reason the bad stuff happens is because I'm ignoring all these signs of that potential problem before the problem actually occurred. And it happens once I start to be honest and self-evaluate every time a major breakdown, major fault, major problem occurs. When I looked back, there were clear indicators in almost every one of those that something was going to happen that I ignored. Then stuff hit the fan and it was a major problem. So now I've realized to be really alert to what's going on. And when you see things, just take a step back and go, what can I learn from this? What potential danger can come from whatever this is teaching me and telling me, and be very proactive of taking steps of prevention. And it's astonishing how much of a difference this has made in how I run a business, because I'm now completely proactive versus reactive. And very rarely is there this major disaster that happens, because I've kind of thwarted off all the disasters by just looking at those indicators and those signs beforehand. And then when something bad does occur, I always sit back and say, okay, what did I learn here to prevent anything like this ever happening again, and build in processes and steps to try to prevent from that in the future. So it's been an interesting evaluation process over the last year, which I've learned to be able to kind of fend off some of those bad things before they even really happen.
Cool. Well, good stuff. So, what is, so for someone who's trying to, take their business to that next level, or maybe they're just starting and they just want to start to succeed, how do they get there? Maybe a couple things of what you see to how do you get there?
Well, I think that the first thing that's interesting is that people don't know where they're going or what they're trying to do.
Sure.
So I found one of the important lessons is to start with the goal in mind. And I'm really bad at trying to, get into and do things, but then not understand the goal of where I'm going. So
Yeah.
I think to map out where you want to be, what is your goal for the next year, 3 years or 5 years, however you want to do it. Long-term 5-year goals don't work well for me, but focusing on all my attention on a 1-year goal of what I'm going to accomplish this year does work well for me. So I think having an end goal of where you're trying to get in the next year, or what you're trying to build, or where you're going, I think that becomes extremely important. I think systemizing everything becomes extremely important too. Building automation, CRMs and autoresponders, and, all the ways that we have technology now to automate, whether it be instead of posting on Facebook every day, schedule your Facebook post to save you time. I think those systems become very important for business owners to free up enough time to work on their business, instead of being stuck and kind of fighting the day-to-day and never being able to progress and grow. And I've really found, and this is different take than what I see a lot of business owners do, but I've really found that by teaching and educating, instead of just trying to sell, really is the secret to longevity in business. If you're helping, if you're out here teaching and educating, like we have no problem doing hundreds of videos on YouTube, or being here with you, Todd, or being able to go onto other social platforms and teach people how to do what we charge people to do, right? And people are wise enough to know that by working with us, they're going to get better and faster results. But they can still do it on their own. And those people become our best testimonials, and they refer more people to us. You just can't lose in an environment where you teach and you educate and you help. And then people will come to you and want to work with you and buy, versus just trying to keep what you do secret and behind the curtains and then try to charge everybody for it. I've just seen that whatever you do in your industry, if you go against people that are selling and you're teaching, it's not even fair. It's such an unfair advantage you have. But yet I still see a lot of business owners trying to not pull back the curtain and trying to hide that. So those are, I can go on and on again, because I made a ton of mistakes and learned from them. But those are some of the biggest lessons that I think that a lot of business owners should consider learning, that I think will help advance them faster and significantly further in the business growth.
Yeah, I think so many people think that, if I teach it, I'm giving all my secrets away.
Sure.
And it's like, there's no secrets, especially in today's age. There's no secrets. The internet is everywhere, and it's got almost everything you ever want to know. It's got. So unless you have some like secret recipe or some invention that hasn't quite came out, you're not going to hide anything.
Right. But if you look at real estate agents, for example, who are you going to go with? Are you going to go with the real estate agent that you got on their sequence, email, and they taught you how to buy a home, how to get an appraisal done, how to read an appraisal, how to find an inspector, how to negotiate the deal? Are you going to go with that person or the guy you see on a park bench? The guy on the park bench, poor guy, he has no shot against the one that got with somebody early in a buying process and teach and educates. Because now that customer goes to buy, they naturally gravitate towards the guy that taught them most of what they know about real estate. It just, trust is built, integrity is built, credibility is built. The person's an expert. Every factor of somebody that you'd want to do business with, you're establishing with one versus the other. And like I said, it creates a completely unfair advantage.
Yeah. The only way that guy on the park bench is getting the business if he's doing both, and for you and for anybody who's got a business, if your consumers are educated and they already kind of know some of the basics, it makes your job way easier, and it makes the success that much quicker for it. So by you giving some free education, these people hearing what you're talking about, they're already going to have some of that leg up that's going to help create a good situation for everybody.
Yeah. And it's interesting because and we're the same way. I first started doing that when I was in consumer credit because nobody understood how it worked. And then people call us and they question what we did. And we're like, we'll teach you. And we'll teach them all before. Now our sales team loves it, because if somebody calls and the first question we always ask is, how did you hear about us? And if they say, I get your emails, it's like, cha-ching, there's a sale there, because they're now calling us, which means they're ready to take action. Yeah. They've clicked into an action mode. They know who we are. They've been getting our emails. All that's done. If somebody says, I just saw you on Facebook a day ago, well, then we won't even try to sell. We immediately then provide education information to them, because we know somebody won't buy without having that information. So it's really an interesting dynamic as you described, because we don't even have to sell to people that get our information. They're already sold. And if somebody hasn't got our information, we won't even try to sell them. We just give them more education until then they're ready to come back and buy, because they've already been pre-sold.
I really like that approach. That to me, that's really smart, because your sales guys could go in, and women could go in, and they could try to sell these people that clicked on the Facebook ad, and they'll get some of them. But the success rate of what you're saying you're going to do is, I would think, just way, way higher doing that. You're educating people. And then they're going to likely, they've got friends, and they're going to be sharing some of that information as well, potentially getting some other people as well. So I really like that approach. I think that's great. we've already talked about some mistakes, but if you've got, maybe you don't have another one, but if you've got a biggest mistake, I always like to ask that question. And how did you learn from it?
Biggest mistake I've made?
Yeah.
It's hard to choose from the large volume of mistakes I have to choose from. So many things. It really is. It's hard to choose. I've made so many different mistakes along the way. But I definitely think that for me personally, the reason I'm here really did come down to personally guarantee what will happen in the business. I didn't understand that things going bad in the business would take me down personally. I really didn't know that, nor did I understand there was a world where the two could be separated: consumer personal credit, consumer business
Hmm.
liability. And that was a huge mistake, because not only did because I default on the business, they take out my personal assets, but because of that, I lost my ability to save myself. Like, if I would have had things separated, my business would have taken the hit. I would have been fine individually. We had hundreds of thousands of dollars available to us in credit on the consumer side. That could have stayed intact and we would have had no problem digging our way out. But in my personal world, when I started signing for stuff in the business and it would defaulted and then it went on the consumer credit and then all my credit issuers pulled that credit, it was a gross miscalculation for me, because I always said, hey, anything happens. I got $250,000 in credit in the business, $250,000 in credit in the consumer. What could happen that I wouldn't have all of
Sure.
the that this money couldn't help me recover from? But then all of a sudden, when one event caused all credit to contract and it all went away, I had no idea that that was even a possibility. So for me, that was one of the biggest mistakes, because it took me 10 years to ever really fully recover from that, at grave financial cost to my family, because
Yeah.
I had to learn that lesson the hard way.
Hmm. Yeah, that's interesting that you say that, because yeah, you're right. You've got $500,000 between, you know, the business and personal, and you're going, what can happen?
What could happen? I'll tell you what could happen.
Just call me up. I'll tell
It's
you.
a long story of rating bond thing, mortgages incorrectly. But
Yeah.
we've seen it, right?
Yeah.
And that's what's interesting is I remember going through it and telling my wife, I'm like, I'm so lucky to have went through this or be going through this, because like most people in their business career will never get a chance to go through this kind of recession, this kind of economic collapse. And when you go through it, like all kinds of things you see that normal business owners don't even think about, don't even think of a possibility. And it helps you build contingencies in to future businesses that most people just don't have. Another recession hits, we're pretty well prepared over somebody that never went through the last one, because like to them, it's shocking. And to us, it's completely believable and probably predictable.
Yep. Yep. Good points there too. Yeah. Not that you wish that upon anybody, but made you much better business owner, made you much better at being prepared for it. So cool. What's one of your favorite books, or maybe a book you're reading right now that you're really enjoying?
There's a lot of good books, and I try to read a lot of really good books. One of the most recent, really cool books I've read is called The Power of Habit by, I think, Robert Duhigg. I'm not sure, but that's a really good book that teaches you how habits work and how to basically establish new habits and break old habits. I like that quite a bit. And then The Power of Positive Thinking is always one of my best books by Norman Vincent Peale. I think that's one of the best books that's ever written, just with,
Hmm.
how many things are within your control if you kind of get your mindset right, that unfortunately I don't think a lot of business owners have. And I believe that. I think it's really mind, body, soul when you run a business. You have to stay physically healthy and you have to meditate and focus on the mental side. And then I really think you have to get your mindset right to be able to best serve your organization. So those are a couple of them, but I'm a big book fan. I like to read a lot of books and always try to take on as much new information as I can.
Awesome. Cool. Um, Any daily habits that you have that help set you up for success?
Well, I think how you start your day is important. I think it's really important. And I start my day with always the same way. I come in and I do yoga every morning. I do meditation every morning, and I have, a workout to get physically active every morning and eat a healthy breakfast every morning. I do those things every single morning, and that helps my day get started the right way. I could sleep in for an hour and a half and I feel so much worse than if I just
Yeah.
got up and did those things. So I think starting your day that way is important. And then I try to end my day as well with meditation, and just try to not even go into my bedroom with anything work related on my mind. Just give myself that time to even focus on, visualizing what I really want, and let those thoughts kind of what puts me off to sleep, instead of anything negative, as I think we tend to do. So I really think starting and ending the day, and the habits you form around both of those are extremely important.
Cool. Last question before we wrap it up. What's your definition to obtaining financial freedom, or to financial freedom?
Well, to me, financial freedom is probably different than other people, because to me, it's just having the financial security to know that I don't have to work, that almost anything can happen and I don't have to work. The stock market can collapse and I'm still okay to not have to work. So I think it's the diversification of funds, to me, where working really is a choice. It's something I choose to do. It's not something that I ever need to do for the rest of my life. For me, that's how I define financial freedom.
Cool. Awesome. Well, Ty, I appreciate you being on the show, and yeah, congratulations, by the way, of bouncing back and being positive. I can tell you're very positive, and you enjoy what you're doing. At least it seems like it from from me talking to you. So congratulations for bouncing back, because I think a lot of people that went through something like you went through would just kind of throw their hands up and go, "I'm done. I'm going to go get a job," or something like that. So um, that's awesome. And again, thanks for coming on the show. How do people get in touch with you?
We got a great free guide at creditsuite.com/EIN. That's Credit Suite, which is credit, then SUITE.com/EIN. And at creditsuite.com/EIN, they can grab a great free guide that maps out more in depth than we've had a chance to talk about today, the exact steps to build business credit. So anybody even that's just thinking about starting a business or already established can jump in, follow those steps, and start using business credit to be able to fund the business.
Awesome. Appreciate that. Well, we'll link that into our show notes too, just in case anybody didn't quite catch it. They can just go on there and there'll be a link to that. That's it. So have a great rest of the day. Unless you got anything else you want to
No, that's great. I appreciate you having me on, Todd. You're a great host. Thank you so much for having me here.
Appreciate that. Yeah, have a good rest of the day.
You too. Thanks.
Hey, thanks for listening. Thanks for showing up. And a special thanks to Ty Crandall for coming on the show, spending his time and showing up, giving us a ton of value. He talked about, I thought was very valuable, using your business credit to fund your business instead of using all your personal credit. It's so quick and easy for us just to tap into our personal credit. We think we have it and we've got good credit, so we might as well use it. But those who are smart aren't using their own personal credit. Think about it. Does you think, Sam Walton with Walmart was using his personal credit to build up Walmart? GE and just big companies. Is the CEO putting their personal credit online? Absolutely not. Nobody puts their personal credit online in the big companies. So why would you, on a small company just trying to start out or trying to grow, put your personal credit on the line? So I thought that was great advice. 3 things I took. First of all, let the business fund itself. Get that credit in line, work on that, and build your available credit before you need it, especially, and build it on your business. And so that way, when you're ready to deploy some capital, if you're ready to expand your business, you've got it. It's there. It's ready. The next thing is diversify in your business. Definitely very valuable. You don't want just one stream of income coming. You can vertically integrate. You can connect several types of businesses together vertically. I think that's definitely a positive thing to do as well. Without, of course, spreading yourself too thin. That's never good either. Making sure you have that one focus, but diversifying through that focus. And then the last thing is map out contingency plans. Talked about having that contingency plan before something happens. Know what you would do and map out those contingency plans so that you protect yourself. So again, appreciate Ty showing up. Go to creditsuite.com. He's got that free guide, creditsuite.com/free guide. Yeah, you can check that out. Check out more about what they're doing. He's got a couple of books on there as well, and get to know Ty a little bit better. I appreciate you coming on and listening. Go on to go into Facebook, connect with us on Facebook. You want to learn more about what we're doing. You want to learn more about what I'm doing. Go on to Facebook, connect with us on the Pillars of Wealth Creation page. You can also go to my website. It is live, active, and ready for you to go to it. It's called VentureDProperties.com. Again, it's VentureDProperties.com, or you can go to pillarsofwealthcreation.com as well, and you'll be able to find us there. And then iTunes, you can go on and give us a rating and review, hopefully 5-star. But give us some feedback as well on Facebook or any of our channels. I am Todd Dexheimer signing out. Make every day a Saturday. Are you ready to start investing in real estate today but don't know where to start? Sometimes investing can seem way too complicated, but it actually couldn't be any easier than with homeinvest.com. You know the co-founder and my friend Nate Armstrong. He appeared on episode 20, and if you haven't heard it, go back and listen to it, episode number 20. Home Invest is a company that allows you to invest in turnkey real estate. Their goal is to build powerful investment tools that make real estate investing accessible to everyone. They have contractors and property managers available for you with the click of your mouse. While other real estate agents can only offer a property, Home Invest brings you a full turnkey package that allows you to diversify your investments, earn passive income, and start building equity in properties. Their simple, intuitive design allows newcomers and experienced investors alike to hit the ground running and to be able to choose the properties when they want and where they want. View easy to understand charts and data to allow you to buy in only a few clicks or just a simple phone call. With Home Invest, you'll be building your portfolio as quickly or as slowly as you would like. And right now, Home Invest is giving our listeners, Pillar of Wealth Creation listeners, a free course on how to finally win in real estate investing. So go to homeinvest.com/pillars. That's homeinvest.com/pillars to claim your free course today.